Hi, I'm Lee Stone, and this is your MaxiForex Week in Review. Today, we will cover some of the major financial events of the past week and discuss how they impact the global currency markets. But before we cover headlines of the week, let's look at last week's risers and fallers. The Euro-US dollar pair continued its gains this week. The pair gained just under 0.5% and was last seen trading at 137.52. The British pound traded mostly down this week versus the greenback, dropping 0.73% and closing at 161.14. This was the second consecutive week of poor performance for the US dollar trading against the Japanese yen. The pair fell 1.74% and was last seen trading at 81.65. Tough times for the US-Canadian dollar pair continued. Overall, the pair dropped 0.75% and was last traded at 0.9784. Looking at commodities, gold had a solid week, gaining nearly 1.5% and closed at $1,408 per ounce. Meanwhile, crude oil rallied last week, with April crude oil closing at $97.88 a barrel, up $8.17 for the week. In news this week, the problems of the EU were overshadowed by the trouble in the Middle East and North Africa. However, last week Irish voters went to the election box and appear to have roundly ousted the ruling party. The new government coalition is not expected to be significantly different, but they have indicated a desire to have senior bondholders of failed Irish banks to share in the costs. In the Middle East and North Africa, unrest is growing more violent. As a result, industry experts are guessing that Libya's oil production has been cut by 40 to 70%. April crude reached a high last week of $103.41 a barrel before retreating somewhat on announcements by Saudi Arabia that they would increase production to make up for the shortage. Deadly unrest spread to Iraq, where security forces killed a number of demonstrating Iraqis early Saturday morning. Gunmen had attacked Iraq's largest refinery, setting off bombs and effectively shutting it down. The spread between the April crude oil futures and December crude oil futures narrowed last week by $3.78 a barrel, settling at $4.09 on Friday's close. To discuss more headlines, let's bring in analyst Martin Smith. Hello, Martin.
Hello, Lee.
So, how do you view this most recent rise in oil prices with the ongoing unrest in the Middle East?
Well, I believe this is temporary, and this seems evident by the clear risk appetite that was visible last week, despite the turmoil. There are strong fears of economic disruption due to a surge in oil prices spurred by the Libyan crisis. But the market relief came with news that Saudi Arabia has increased its production. As you mentioned, industry experts are guessing that Libya's oil production has been cut by somewhere between 40 and 70%. But there are other oil producers such as Qatar who seem quite willing to make up that loss. Canada is a major oil exporter, and although crude prices were down from Thursday's 2.5-year high, they were still strong on Friday and allowed the currency to break the 98-cent barrier. So in my opinion, as long as the situation in North Africa remains unsettled, crude oil will be supported. Swings can be volatile, but if one has the stomach and deep pockets, one may wish to consider buying crude oil on corrections.
So please share your views then with us on the unexpected increase from Russia on the refinancing rates.
Well, Russia's central bank has raised the refinancing rate for the first time in 2 years. The level sat at a record low. This is the first increase since December 2008. They also boosted reserve requirements for a second month in a row to curb inflation. According to a Bloomberg survey of 18 economists, it's expected that the refinancing and repo rates will likely be left unchanged, while the deposit rate is expected to rise. Russia's central bank raised its main rates by 0.25 percentage points and boosted the refinancing rate to 8%. The overnight deposit rate moved up to 3%. And the overnight auction-based repo rates were lifted to 5.25%. So Russians see inflation as the biggest challenge facing the country. Currently, they have the highest inflation rate among the largest and fastest emerging markets. Prime Minister Putin's administration ordered oil companies to cut prices for gasoline and diesel to stem price increases and has sold discounted grain from state stockpiles. Overall, I think inflation has reached a threshold level now that it is starting to approach 10%.
Thank you for that, Martin. Let's go to our Ask the Broker question. Today's question comes to us from John Hamilton in Melbourne, Australia. He writes, after the New Zealand earthquake earlier this week, what do you see happening for the Kiwi?
Well, I assume he means the New Zealand currency. I'd say that it's a bit early to have an accurate assessment of the earthquake's damages, its impact on the country's currency, and its impact, in fact, on the economy as a whole. The Kiwi hasn't dropped as much as some analysts had expected, which is always a good sign. In fact, the New Zealand dollar rose 0.21% on Thursday and about 0.5% on Friday. There was some fear that New Zealand's credit rating would take a hit as a result of the quake, but S&P came out on Friday stating that the nation's ratings aren't immediately affected. There may be a couple of drops here and there as a full assessment of the damage is revealed, but I think their currency has shown some resiliency and should remain relatively stable.
Thank you very much, Martin. Well, that is all the time we have for today. We hope you enjoyed our weekly review, and we hope you will join us next week. Until next time, be sure to visit us at MaxiForex.ru.